Good morning. It's Monday and we are on the charts. Let's see what we have as far as news is concerned. It's a few minutes before the market is opening. There's no news on the for the U.S. session today. Wednesday we have FOMC meetings, and they're going to give us the minutes. And then Thursday we have core inflation rate month over month, followed by the core inflation rate year over year. After that, there's the inflation rate for month over month, and then the inflation rate year over year. How now, brown cow? How now, brown cow? Friday, we have PPI month over month, and then Michigan consumer sentiment, uh, preliminary for April. 10 a.m. on Friday. And it's going to be a very, very good week. All right. So yesterday, I posted a quick little video and I talked about consolidation going through this range. This morning, we woke up to a short term consolidation. Possibly the volatility from the beginning of the month has kind of quieted down, and now we're going to, move into the operational price action for the month. Um, so let's see what that gives us. Okay, here we are on the 4 hour chart. Excuse me, for the Nasdaq. And we have some imbalances drawn out here. This is E-mini Nasdaq 100. This is not. Mm, 3 minutes to the market open. On a 1 hour chart. Just watching, looking at London session here. I have, I'm going to move to regular trade now. No, I'm not. I'm going to sit like this and look at this very quickly. And what I wanted to do was mark out this highest up close candle, the close first, then the open. I'm going to take a look at the low, and then I'm going to hold back. Going to move to the 15-minute chart and look at the relationship between the low, the open, and the close of this hourly candle in relationship to where we are on the 15-minute chart. Wow. Excuse me. Remember, this is very risky, guys. So if you decide to trade on your own, then you would trade at your own risk. And I'm not giving signals. This is more of trading entertainment. I'm using YouTube to basically document my journey, to document the struggles of people in my age group or age range who have gotten into trading a lot later than a lot of the kids out there who, and I say kids because I'm literally mean people who are between, 18 and 25 who started their trading journey much earlier, who were in a group or a cluster of people who traded around them. And then there are those who worked in the 9 to 5 workforce for many years and then decided to um, change careers or decided to try to understand the financial markets better or whatever your motivation would be. So yeah, again, these are signals, and obviously this isn't a signal because this isn't live. So I'm not going to attempt to teach you how to trade. I'm going to basically show you my issues and downfalls when it comes to trading the ICT, trading ICT strategy, SMT or SMC or whatever anagram you want to use for um, the strategies that ICT teaches. The market is open. Okay. So now that I have this hourly candle marked out, we are well below the low. There was an imbalance right here on the 15-minute chart, just right out of London. We drop down to the low of it, and we close extremely low in that range on the 15-minute chart. I'm moving to the 1-minute chart, and I'm gonna slide in regular price action. Everybody is concerned about whether or not we were going to close in the gap above, and there is a nice considerable gap that we have. There's a volume imbalance here, and the high of the volume imbalance is literally mm, the high of the volume imbalance is literally consequent encroachment of that gap. So we've dropped down below this imbalance on the 15-minute chart. There's no first presentation fair value gap as of yet. We only have two candles. Oh. Excuse me. Personally, I'm not anticipating a move to the upside on the 15-minute chart and also on the hourly chart. What I noticed is that we had this run to the upside. We ran down below this level, we closed below the close of those levels. Then we moved to the upside. And personally, um, in right, the way that I'm thinking about the market right now is we have this very long range of up close candle that is the dealing range. We've dropped down here to we hit this area of down close candles, and then we had a slight reaction. Mm-hmm. Mm-hmm. Wow. I was looking at the 10-minute chart. That gave me a false read. Kind of have to back up a little bit now. That run up touched the low wick of that hourly candle. This is the low of the wick of the hourly candle that we marked out. This middle level was close. The lower white line was the low of the wick of the hourly candle. We rose up, we touched it, traded up into the low end of this up close candle. Let's see what happens. Now, again, we could be in a very nice organized consolidation at this point. Excuse me. As price just moves down and settles in. It's imbalance on the 5-minute chart between here and here. We could take that and pull that forward. We traded into it on the 5. To the wick of this candle, we've broken down. We traded up here, touched the low of the hourly candle. Excuse me. My instincts are saying sell right here. I put my stop loss above the high of this down close candle, but I'm not going to. Why? I don't know what I could possibly be waiting for. If we take a look at this from a higher time frame perspective, we are literally in the swing high that just went up and we had just reached inside of this imbalance. This is a swing high. This is the second high. This is the third high. And then we've rolled out of it. If I were to practice patience, then what would patience dictate or what would patience say? Patience would say, wait, and hold. What I also see is that this level and this level also interact. The small imbalance right here, just inside the pre-market. See the small gap, then we come back up here and we touch that again, and then we slide down. Mm. Hindsight is definitely 2020. Below the opening price of the 2 hour candle right now. We just slid below that area. One of the what I'm thinking right now is, and this thought process, my thought process is pivotal to what I'm going to do now. That's the low of the 2 hour candle right there. The first thing that I'm thinking is how early it is in the day. My first thought. Oh man, it's early. The market just opened. Blah 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 blah. Right. So, and with that thought process, I am focusing this area. This area is that the first, I don't know, 7 minutes right here of the day, and I'm expecting to see a gap in price or some sort of area where I would assume would be the first presentation fair value gap. Now, what have we seen recently? Recently, we've seen price begin to develop and mature to a greater degree before the first presentation fair value gap actually develops. This swing high, we touched the low of any of those candles. Nope. We just popped up. It started the wick of this down close candle. It looks like about 50% of that wick. Now we'll see what happens. And so it takes a while for the first presentation fair value gap to develop. I'm going to zoom in because I want to be able to understand or see whether or not there's any imbalance. And I do believe that this run up to the low of that hourly candle is the first leg of our distribution. Getting short here, the stop loss, getting short here with the stop loss there was the statement that I made and did not take that trade. That's okay though. That is okay. What I would prefer to see would be a higher time frame imbalance that we could utilize. The 15-minute chart here, this gap, in hindsight, could possibly be that gap. How so? That says 5. On the 15-minute chart, we have this imbalance. We run above it. We came down to it. We touched the high of it. We went up. We went to consequent encroachment of it. We went to the low of it. We traded out of it again. Consequent encroachment, out, down, to the low, and then away. That is, I believe, inversion, an inversion gap. Hmm. Yes, we'll need to see if that holds. But I believe the I'm tongue tied this morning. That's really crazy. But I believe that there should be, when we leave an inversion gap, there should be a fair value gap that forms immediately after leaving an inversion gap. And that's why I say if. That's why I say if, and I have to qualify that because it's taken me a couple of seconds to qualify effectively and be patient at the same time. 4 minutes left in the. Mm, okay. Watching this 15-minute candle to see whether or not we press down through this level. How would you define FOMO? How would you define FOMO? Do you know what FOMO is? Not do you know what the definition is, but do you know what FOMO is for you? What triggers it? What triggers that feeling that if you don't do something right now, then you're going to watch all of your potential wins, your potential earnings go away. What triggers FOMO for you? Is it watching the chart just melt, right? While you're sitting here with your finger hovered over the sell button? Hmm? What triggers that FOMO? Is it taking that trade and being stopped out immediately and then watching the market rally in your direction without you? Is it the YouTube videos of seasoned veterans pulling in 10, 15, 20, $30,000 a day? Is it the videos of the fancy cars and the traveling, the flights, the fine food? Does that trigger your FOMO? Something does. Something should. I'm looking at the market and we are about to equalize the range from the low to the high. And I haven't taken a trade. Hey. And one of the reasons that I did not really want to take a trade because it's Monday. I hate trading Monday. Monday is one of those days when I first began that used to just get me every time. Then for a long time I was able to overcome Monday. Now Monday has reared its ugly head. Coming into Monday, there's this feeling of, I don't know, of expectancy. Sometimes I'm expecting something, and I'm not quite sure what it is. Now we drop down to this pre-market gap that's here on the 15-minute, right inside London. Right inside London, there's a gap right here that London opened up for us. On the 15-minute chart, we dropped right inside of it. We closed in premium. We touched down. We reached the low of the gap. I guess the gap would be. Man, this is always a catcher for me, right? This is always things that gets me. When there's a low, is that truly the gap, or is this the gap that I'm looking for? Right. So I'll just go to the 5 minute. There's the imbalance on the 5 minute chart. We put a wick all the way through. We pulled back, but it seems as if we are moving steadily to the downside. Okay. Overall, the market has been extremely bearish. Everybody has been very vocal about fears of a fears of a what do you call that? Black Monday, right? Ray Dalio put out there, and in everybody's mind, the economic world is on the verge of full-on collapse. Okay, that's probably true. However, right now I'm focusing on the candles right before my eyes here. I've created a fib and I ran the fib from the high to the low, and I'm watching as we retrace. I do not know whether or not I am looking for 50%, 62%, or 70%. No idea on what those odds may be. You may say to yourself, well, Grady, are we gonna bop 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 bop? My only issue is this. These all look like these two lows look relatively equal. They look relatively equal to me. And I wouldn't imagine that price would just double bottom, gap up, trade higher, trade low back in, hit that gap one more time, and then take off. Who do you think I am? Or what do you call this? What do you call this? What do you call that? A turtle soup? And this is the magic of trading, folks. The magic of trading is that you can always see an opportunity. And I think to me, that's the source of FOMO. The 1 hour chart is leaving a nice long wick at the bottom. We are right back to the low of the prior up close candle. There are 10 minutes left in this hour, which means that the macro is about to begin any moment now. In about 20 seconds, we're going to see the macro activate. We have retraced 50% of the range from this high to this low. Now, because we hit that 50% level as a 50% retracement, and we're at the low of these two up close candles, yeah, I'm thinking to myself, go short here. That's the first thing that crossed my mind. Right at the beginning of the macro, I've taken that pre-macro trade before, and I just wrote down, I just took a note of that, and I'm not quite sure how successful I've been at with pre-macro entries. On the 15-minute chart, we're looking at something very cute like this. And why does this interest me? Normally, when I see three down closed candles, first thing I think is fair value gap, right? But this third candle closes way down here. I think that that is a strange sign that we should not have come back into it to trade to it, right? Normally, a fair value gap is sort of like that, right? There is a gap, but when here, let's take a look right here. You see the high of this imbalance and the low of this imbalance on the 15. None of these candles are touching. It is just this particular candle, and the only thing that's overlapping are the wicks. We've just traded to the consequent encroachment of that area, which is a 62% retracement of the range from the high to the low. In the 5-second chart, we are, you know, at consequent encroachment as well. Do 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 do. OTE. This is what I love about the macro. I have to go back and restudy. Oh, excuse me. I need to go back and restudy how the macro should trade because I didn't believe that the macro was displacement. I thought the macro was when we ran to a liquidity pool, right? And then once we run out that terminus, then that's where price makes its true move after the macro. This macro has run us directly into the low of this 5-minute candle, the high of the 5-minute candle, the opening price of the 5-minute candle. The opening price of the 5-minute candle and the close of the close of the 5-minute candle matches up with the prior close of the prior hour. So we're right here at the low of this 5-minute candle. We hit a 70% retracement of that range from high to low. Is it possible that we would run back to the high of the prior up close candle? Yeah, no, man. But we look really bullish right now. And for all of this movement down, the turn to send us the opposite direction was a lot less setup. I thought that was very interesting. That was a lot less, well, a lot less setup. This looks like this is where we just traded to, and then we've popped back into this area. And I said that there wasn't much setup, but yeah, it was a very quick 1-2 pop, and then up to the upside. Mm, FOMO. And again, I did not take that trade. Now, for me, if you see the trade and you understand it and you studied it and you've back tested it and you've traded it before and you see that, go ahead and take the trade when you see the trade. For me, I am in a phase of my trading where I have had consecutive wins and then I become overconfident. I overtrade, become trigger happy. And when I finally get a trade that goes my way, all of my profits are consumed with drawdown day after day after day. I go into drawdown, two, three, four trades. I have one trade that eliminates five trades, right? So I go up. But it is exhausting and it is not sustainable to trade like that. Just to go up, go up, go up, go down four, go down five, go down six, then go up one that handles everything. There's a small imbalance right here on the 1 minute chart. 10 seconds left on this 1 minute candle. 7. We nearly touched the 87 level here. The 87% retracement is a trade that I'll take a loss on. Excuse me. We trade into the wick of this prior 1 minute candle. Okay. Tunnel visioning now. Looking at this small imbalance on the 5-second chart. Right. Come on, baby. I need to get a new mouse, I think. Right here. That's the 87% retracement. Tap the 87 from, we drop down and tap the 87% retracement from above. Just shy of full 100% retracement. New hour opens in 3 minutes. Two minutes and 27 seconds left in the 5-minute candle. Looking for the new hour open and the impulse for the new hour in 3 minutes. Excuse me. I'm making a note here, and the note that I'm making will be on the nature of the macro. Because of what just happened, I believe that I have been misinterpreting the instructions for macro behavior. I had this in a lesson the other day. Not a lesson. Whoa, not a lesson. I had this in a video the other day. This entire move down to 945, this is 945. I'm looking for 950 to represent a macro, right? My understanding is that the macro is, again, should run to a point of interest, hit that significant point of interest, which will trigger the time-based algorithmic system to um, fulfill a series of orders, right? Is that the hour? Hour just ended. New hourly candle just open. There's the close of that prior down close candle, prior up close candle. So here is the new hour. Boom, 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 boom. There we go. There we go. There we go. I love it. I love it. Boom. Okay, now we see what's happening here, right? Here at this particular time, there it is. Ooh. Everything is in sync and functioning until 10 a.m. And now, okay. All right. There we go. There we go. Lag. Some type of a weird little lag here. So the new hourly candle runs up just a little bit higher and then it turns over. Then back into the, where's that wick? The high, that prior wick is right there. Mm-hmm. So let's say this is the end of the macro, right? New hour just opened. There is some volatility with the exchange. Nickelodeon. Be patient. I want to see. I want to see some confirmation. Let me just 5 second gap that I laid out right here. Looking for some confirmation. It's a 5 second gap right there. Looking for some confirmation. Drop down below that 100% retracement level. Straight it right back to it. Mm. The second chart. On the 30-second chart, yeah, that looks like a market structure shift, right? Just watching carefully and closely. 1, 2, 3 on the 30-second chart, then we deliver lower. That's the 87% retracement. This is the area where I always like to enter. What I want to see is a rise to the opening price on the prior hour, the closing price of the prior hour. Okay, that's where we touched it. Now let's see where we close here. On the 15-minute chart, we've just taken out prior high. We got down to this imbalance. We ran up. We took out this prior high. And we turned over and dropped right back in. There's a lot of back and forth price action. That's a little confusing. I noticed that we ran to the low of this up close candle. We dropped in and closed. Now we're here. 23 seconds. Move to the 5-minute chart. Fresh 5-minute candle. We trade into the wick of this down close candle. I mean, yes, this wick of the down close candle. FOMO kick. The trade that you didn't take. That trade that you did not take. FOMO kicked. Boy. Ooh. FOMO kicked hard. Mm. FOMO kicked hard. The only thing that is telling me right now, this is how my FOMO is working. My FOMO is telling me, man, take this trade right here, bro. Yeah, I mean, I know what you're thinking, man. I know. Either that or um, my reticular activating system is like, it's really activated right now, like saying, hey, buddy, what else do you want to see in price? What else do we want to see? Right? What else do we want to see? What I want to see now, after we've traded to the high of this up close candle in this range, is if it's bearish, I want to see a 1 minute downward displacement. I want to see a bearish fair value gap, not an inversion, not a subversion, not a conversion, just a basic, straightforward displacement down below the low of this candle, of these two candles, and close. For me, that will confirm this as highest up close candle, closing below 50% of the range. I need it to close below this candle so I don't see it gather itself and then press through that range. One minute and 30 blah 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 seconds left in the 5 minute. Now we are at the opening price of that 1 hour candle. Let's see if what happens if I go ahead and sell this. And then I'm gonna put a buy order right. Whoa, I'm already down $400. 475. What? How did that happen? Oof, oof. 45 seconds left in the 5 minute candle. So what we don't get is what most traders don't get is that's it right there, right? What's traders most well, that's excellent. I'm glad I recorded that. This is going to be the one trade if this trade goes down from this point, you see this gap right here? That's what I did. That's where I probably should have taken my entry. Right there. Let's see if it go up. Let's see if it goes up. I'm speechless. But yeah, one thing I also notice is that the spread, the spread today is ridiculous. I tried to mark it in where I would normally mark it in at the high end of this range, and the spread that they gave me was trash. That was trash. One trade down $700 on one small range like that. Ooh wee, that's interesting, and that's how wrong I was, right? So that's okay. That's one trade. It's probably the only trade I'll take today. Yeah, I feel bad. Look, I'm like not like these other guys. Oh, it was a paper cut. No, that pissed me off. I waited and oh, how long did I wait? How long did I have to wait for that? How long did I have to wait for that? 9:30 to 10, 30 minutes. I had to wait 40 minutes for that. 40 freaking minutes? Nope. Nope, 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 nope. Hey, that and the spread on this thing was just ridiculous. So where did I enter and where did I get taken out? I want to look at it on this chart. Um, help me, Grady. Help me, help me, help me. So first, I'm gonna zoom in. Then I'm gonna put on my executions, trading, execution. Okay, so I thought the market was gonna go down. I sold at 17 to 63, 75, and got stopped out at 17 to 97. Hmm, that was $34. Let's what entry did you guys give me? See, I'm rolling over this. Normally when you roll over the mark. Okay, so there's my exit. The entry they gave me was down here. I'm gonna mark it in. This is the entry that they gave me. Let's see where that is on the where's the that's just the entry. See anything? Anybody? 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 Okay, so there it is. Okay, this is my entry that they gave me on the short. Came down here, we rose up. As we were up here in this area, I tried to go short. I'll put my stop loss above this level because that's where I got taken out, and that was from here to there. That was $32, 130 ticks in that short little range right there. From there to there was $600. Hmm. Let me see something. I mean, supposing that I bought in the exact same spot, right? Supposing I bought in the exact same spot, put my stop loss right here. I want to let's create an order. And that was like what 37 something something something, and that would be my stop loss, and my stop loss would be down here, and then this would be my limit order. My limit order would be down here. And I lost $700, right? Something is crazy happening in the market right now. That's 20 bands if I got the trade right. Interesting. Right, FOMO, right? Let's go ahead and show you how FOMO works. Because I saw this trade and this is the one that I neglected at 9:45 because I was waiting for 10 o'clock, right? I'm waiting for the macro. So I guess if this is the macro where we ran to this level and then we dropped in, I'm still not I'm still not happy with the way this worked out here today. But let's say if I brought this down and say I risked $700, right? Let's say I risked $700 somewhere down here, 26,000 in 40 minutes on one contract, in 40 minutes on one contract. All right. I had to feed my FOMO. That was a FOMO feed right there. Gee-da-ba-ba-bum. And I guess that's the day as far as trading is concerned. Okay, well, I'm done for the day with that one. That hurt. The risk in the market right now is substantial on the E-mini side. The risk is substantial. The reward is amazing, but the risk is substantial. That was a gut punch. It was a Monday, and I told myself not to do it. And again, the hard part emotionally for us when we first start trading is all of the measurement that we do going in and then finding ourselves on the wrong side. What I wanted to do is I wanted to avoid was this. And I think this is key. This is what I wanted to avoid. I knew that the market was going to go in either direction. Right. Um, however, the market's not going to stop, y'all. It's not going to stop. It's not going to. This is some stuff. So again, let me go back to what I was talking about, V-shaped recovery. Let's see what happens when we get here. So we're talking about a V-shaped recovery in the market. I'm speechless right now. I'm speechless right now. I can't tell you how crazy this looks to me right now. We ran up and we hit that gap. We just tagged it with one wick, immediately got away from it. Catch your breath, Jimmy. 5 seconds left. Gotta watch here. Close. Just watch here very, very watchingly. That's the only thing I'm gonna do right now. Just watch very, very watchingly. 30 seconds left in the 1 minute, 30 seconds left in the five. Just drop back to the prior closing price of the prior 5 minute candle here. Ran below it. In the 30-second, we rose here, put a little something right there. What does that like white line represent? Oh, I don't know. That's been happening on my charts lately. All of a sudden, white lines just been appearing. This line's just been appearing, and I think it's from when I do this, and I'll hit nope, 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 nope. One of these things, you just right click and you just click immediately, and then it'll add a level. I'm trying to distract myself from chasing price right now. Switch to the micro for a second. Hmm. But that's a gut punch. Bam. Whoa. Okay. I'm stunned. I'm stunned. I'm stunned. I'm stunned. There's nothing I can do right now. I'm stunned. Yep, I'm stunned. Oh, these are so lively markets. Jeez Louise. These markets are lively. This is interesting. I am curious as to how everybody else is trading this right now with this type of volatility. I really would like to stop and take a look at what everybody else has got going on over here because this is, I'm not doing anything. I'm sitting here. I'm dumbfounded. I'm dumbfounded. Um, that's 3,500 ticks to the downside. I. I'm hooked on a feeling. Mm, okay. At first, this seemed illogical, like it didn't make any sense. And so at first, I wanted to kind of, drift away from this concept. Using that LS3 that I described last time, although I did not use it today, and therefore I did not take this trade. I took the short here. I'm in nerve grading. So using the LS3, when we came back into this level, there is this imbalance inside of this range where we stopped, roughly here to there. Beep, 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 beep. This is a 5-minute chart. When we came into this level, we tapped this level, swept, closed, rose, close, swept, rose. But I didn't use LS3 today. I did not use it, but I will tomorrow. And you're probably saying, well, great, why don't you use LS3 now? Right. Use LS3 now, right? Let's see, what could we glean here? What could we glean? We move to this quadrant. Bam, how? Bam. Well, the only thing I can see here is that once we traded off for the low of this range, we ran up to here, we dropped in, closed inside of the premium level, swept out, stopped low, hit the intermission, rose open, dropped below consequent encroachment, closed, dropped into the premium, into discount high, rose, swept premium high, opened, dropped, closed below this consequent encroachment again, moved lower. For reference, just drop this right in place. Zoom in a little bit tighter. So we hit the premium of this eighth, closed, wicked higher, dropped all the way down below the intermission, closed exactly on that level, dropped it down through. So what would I expect to see next, right? Because that's the real question. If I use that same pricing logic, can I can it make me profitable? That's the real question, right? So we dropped all the way through, closed down here at discount high, wicked, touched off the high of this down closed candle, turned over and open. That's a higher close. And low, that time frame is too low to be significant. The gap area right here where I lost all the money, you're right back to it. If I wanted to get short, I would have to get short on a move back to the upside if I wanted to. Oh, oh, oh. Without LS3, yeah, pull it forward. I like this imbalance, but I would not be happy putting a short here. I would like to see this gap run. We'll go all the way through it, maybe to the wick of this up close candle, maybe to the low of this candle, then turn over and then move down. Mm-hmm, mm-hmm, mm-hmm. I wonder if we'll leave this imbalance open, or will we trade back into it? Mm. Can somebody explain to me how you guys set your mic up where you can actually move around and do things without running into it, or do you just cut that out your video? That was like long. That was a long swath of time where I was just mesmerized by watching price go back and forth. Okay, I think I'm back now. I think I'm back. Yeah, yeah, I was able to avoid getting involved in another trade immediately. And the problem isn't price not directly navigating, right? The problem is this. The problem is this. This thing is moving the ranges of most days. It's moving the range of most days in like, in a few minutes. And it's like, okay, I want to get involved, but golly, this thing literally is moving hundreds or thousands of ticks back and forth. I have to hold on a second. I have to see what's going on. This thing is moving hundreds of ticks, thousands of ticks back and forth. And for the experience of those who have enough leverage to endure it, you guys are cleaning up today. But just, I need to- I'm not gonna put it on my screen. I'm looking over here on the other side. I have to figure. I have to see what people are saying. I'm reading other people's chat right now. Da 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 da. Be smart. See y'all tomorrow. Blah something something something. Did he give it up? Skip. Yeah, he's saying the same thing that we're saying. He's saying this is some BS, man. The numbers on this thing are on his chart are flashing back and forth so fast. Um, they said the indicators are struggling to keep up with the chart. Hold on a second. Hold on a second. Hold on a second. My man said, "Where is it? Where is it? Indicators and alerts on TradingView are struggling. Yes, they are. Yes, they are, and that's why I got so much slippage. That's why I got so much slippage. It wasn't, it was like the market's trading is out of order. How screwed am I at 600? Da, 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 da. Um, Trading one micro is the same as a mini. It is exchange stabilization. That's okay. Okay. How's it going? BlackRock wanted to something, something, something. Move your face, buddy. Get your face off of there, Patrick. Oh, he hit it. 10K, baby. Right. All right. Okay. 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 So be careful. And I hope that this was as entertaining for you as it was for me. Like and subscribe, and we'll see you back here tomorrow. Bye bye.